Hey, welcome to the closing beat, everybody. Happy Wednesday. Remember, it's a shortened week here. Thursday, tomorrow, the stock market is closing early. So it'll close out actually at 2 o'clock in the afternoon. And then Friday, the markets are closed for Good Friday. We got the Easter weekend ahead of us here. So I hope you guys have a great, safe, and happy Easter weekend. Closing beat, we will not be here for tomorrow, the half day. It should be a fairly quiet day unless there's some sort of excitement that shows up. If it's somehow like crazy exciting, of course I'll do something. But we won't be here. And Friday, of course, market's closed, so we won't be here for that as well. So today will just be our sort of last update on the stock market for the week. This is our closing beat show. We're financial advisors here at Jazz Wealth. We work with you no matter how big or small of an investor you are. If you'd like a financial advisor, but you always thought, hey, I can't have one. Those guys in those tall buildings and leather wingback chairs and fancy suits, I can't have them. Well, you can. We do all that here for you, and I show you that we do that by wearing sort of calm clothes. You notice that little subliminal message? Never suit and ties for me. Not trying to pretend that I'm somebody else. Anyways, stock market off to the right-hand side of your screen. You will see that the market's closed a little bit negative today, sort of an uneventful day, and I think that's bad news. I'll share with you as we go. But you got the Dow down 3 points, S&P down 6, Nasdaq down 4, Russell 2000 down 1%. That didn't really get any attention today. But on the bottom right-hand side of your screen, you can actually see a chart that shows how things moved today. We just sold off early this morning and basically held tight there. No real pressure to the downside, no excitement to the upside. The Russell 2000 to me was an important sort of thing there that really stuck out, losing 0.5%. And by the way, let's go over to it if we can. On the Russell 2000 here, if we could just simply get that to break out and participate here, you'd have a recipe for a market that could comfortably get to highs as far as everything really getting going there. You notice over the sort of weeks here, we've been talking about sectors that have made new highs, stocks, yes, but we don't have everything really bullish in the way that we've seen in past rallies. Well, the Russell 2000 pulling back 1% today really, I think, is the underlying story there. We're just not ready to make it happen yet. The other thing I wanted to point out, S&P 500, we're sitting there almost at new highs, did pull back a little bit today. Did you notice the trade war comments come out today and the markets didn't move at all? For the last couple weeks I've been saying, do you think that the trade deal is priced into the market already, like we all just expect it? Today, did that confirm it? I don't know for sure, but today we got comments that they will, U.S. and China will likely sign a deal at the end of May. They're trying to work out, President Trump's going to Japan to swear in the new emperor there, or to be a part of that, and they're trying to see if maybe he can come over and be a part of a signing as well. There's a lot of back and forth going on. A lot of good news came out today, and what'd the markets do? That news came out and it moved 1 point. The Dow moved literally 1 point. The S&P didn't even move 1 point. So kind of makes you a little nervous, right? We get a trade deal and everybody goes, oh, okay, no problem there. Now, we got great news out of China overnight. That just continues to get better and better over there. Our customers know the whole deal. If you're one of our customers, go into the dojo, by the way. Go look at the last 2 market updates if you want to see specifically what on earth is going on over in China. A lot of good news, right? You see a lot of negativity on TV, but their markets are doing really well, very much so in a bull market, despite what you hear. For our markets here, we're in the middle of earnings season. And as of today, including all the stocks except for after hours here, 85% of all companies that have reported, now we're just getting started, right? This is a blowing sort of a statistic out of context here, but 85% of them have all beat on earnings. That confirms the idea that analysts just messed this one up, right? This is one where all of Wall Street analysts expected really, really low earnings, low growth overall, and companies are still doing pretty good there. So all in all, pretty good. What's not good? Healthcare. So we'll start there with our sector breakdown. On the dojo, you just go over to the homepage there. We got a watch list here set, and it organizes everything for you in order. XLV is the healthcare ETF. Look at that crater, right? Now, healthcare is pretty active anyway, so this isn't very odd. But losing another 3% today, that was your weakness. That held everything back. That sort of Medicare for all thing continues to really be the focus of healthcare investors or people in the markets here. And in fact, all of the 52-week lows today were all healthcare related. You got Humana, New 52-week low there. You got Cigna, new 52-week low. United Healthcare. Oh, that's not going to do the trick. United Healthcare, new lows there. And the CEO, I'm getting ahead of myself. He was one of the main reasons for the sell-off. His comments about the sort of Medicare for all, the approach that Bernie Sanders is taking, that's going into there. I thought I saved his comments. I did not save his comments. I think I put it in the streamer or something below. Anyways, strong drop here in healthcare today. Here's what we're interested in. All right, I'm just gonna try to explain this real quick. The spread between how healthcare is performing and how the markets are moving here is the widest that it's been since 2009. That's the last time it's moved so wide, meaning the difference in direction that they're heading. You got the markets heading higher and healthcare heading lower. That spread's the largest it's been since 2009. Had to get a bit of a history lesson today from a fellow financial advisor friend who's much older than me, that said that the last time that spread was even wider than it is now was, guess what, back when Hillary Clinton was pushing her healthcare reform early to mid-90s there, when that was going through. So really, really shows how the markets don't obviously want healthcare for all, and they really don't want Bernie Sanders to get any traction on that. That continues. You should see the comments from the CEO of United Healthcare. Very aggressive comments saying how this would be a huge disaster. Now, he has to say that, right? I mean, that's like kind of, he's got to say that. Anyway, so we'll move on from there. Semiconductors moving to new highs today, 1.5% on the day. There you go. Also, new 52-week highs again. That's twice already this week. Look, Qualcomm is a big part of that. Qualcomm, Qcom, there you go. Higher by another 12% today. This makes up almost 9% of the semiconductors there. So that gives you an idea why there was some strength. And you can't see the charts. There you go. Let's go back over to that. There you go. Gives you an idea why there was some of that strength today. I found it rather interesting that Intel, Apple, and Qualcomm all announced this together. You know what really happened? You want the quick underlying story here? Apple was leaning on Intel to develop that 5G modem technology because Apple has zero access to it. They're fighting with the only people that could give it to them. And Intel basically, we now know, like at some point, Intel went over to Apple and was like, hey, we can't make this happen. We tried, but we can't do this in a way where we make a profit and everything works for you. Sorry, so we're going to get out of this. We're not going to tell Wall Street yet, but we're going to get out of the 5G modem production here. And Apple was like, oh boy, you just know this happened behind the scenes. They're going, well, I guess we have to become friends with Qualcomm then. Lawsuits dropped. Everybody's happy. All of a sudden, they're like, yeah, we're going to work together. We're going to make this thing happen. Apple really had to make that happen. It's good news all around, of course, but now you know like what happened over the last couple months here that we just didn't hear about until yesterday and today. Anyways, I don't care. I don't know if you care about that, but semiconductors, very strong move on the day there. Intel notably, down here. Intel went to new highs as well. That was one of your new 52-week highs today. And things in the semiconductor space. If you go down to the individual chips, there you go. You had KLA 10-core hit new highs, though that did close on lows, if that data is correct there. Yeah, it is. Xilinx hitting new highs on the day, and so that category just did really well. We talked about healthcare already. Let's take a look at, there we go. Take a look at the transports. Ta-da! Transports higher today. A lot of the rails. Your 52-week highs today were focused on rails. Kansas City Southern, which is KSU, if you want to take a look at that. CSX was the latest to report earnings. So new highs on the earnings report. That came out yesterday, by the way. And then, Norfolk Southern, NSC, if you want to take a look at that. Those all new 52-week highs today. That's definitely helping the transportation sector. So be sure to check that. Oh, yeah, what did I put United in there? United Airlines. There you go. That's about 4.5% of the transports. And that was higher by about 5% today, all on earnings. I think we covered that yesterday as far as the earnings there. Tomorrow for earnings, if you're gonna be around, it should be a rather quiet day. Early close days are typically pretty quiet. You got Honeywell reporting earnings tomorrow. Skechers, if you care. I like Skechers. Every pair of shoes I have is Skechers. And then Phillip Morris, tobacco company Phillip Morris reporting tomorrow as well. And then tomorrow night, our class is going to be on, hey, what if you're an investor and you don't want to invest in Phillip Morris? Can you exclude that from your big basket of investments? Well, we're going to cover that sort of socially, environmental, responsible investing so that you know what our customers have, or what our customers know they have available to do here for them. You know, it's a requirement that we actually ask you, is there anything you don't want to invest in, such as tobacco and things like that? So we do that as everybody joins us here. We're going to go over how all that works in our Wine and Wealth class. Morgan Stanley, they reported earnings today. Stock was higher by 2.6%, just beat expectations by a mile, right? A lot of these companies are beating expectations by quite a bit. 16 cents for Morgan Stanley. Wealth management was one of their better performing areas. The fees that they collect on their high net worth customers obviously going really well, and they're doing well for their customers, so it sounds like that was well worth it. That helped the banking sector today. You got XLF is the ETF we use to track that. It's desperately trying to move out of this sloppy and wide range here and doing a pretty good job. Tomorrow, earnings from American Express won't have a huge impact, right? Unless there's something seriously shocking about what American Express is doing, shouldn't have too big of an impact. American Express is less than 2.5% of the XLF, so it's really going to take a lot to make this happen. I don't know if you know this, by the way, but American Express, let me just check my data here. So American Express positive by, today, what did it do? Today, basically flat. It is only positive the day that it reports earnings, which will be tomorrow, only positive 48% of the time when it reports earnings, right? So even if it's a down day, as long as they don't lower guidance, I don't know if you study this stuff, but when American Express lowers their guidance, stock gets crushed. Now, they haven't done that since 2015, so it should be just fine. But when they lower guidance, they get crushed. But generally, the stock is not positive. I mean, it's almost a 50-50 split, but it's usually not positive on earnings day. So it could just be one of those things, gets announced, and everybody sort of moves on. You hope for the best there. Netflix, basically, all of that action from yesterday, it was down a lot and then shot back up, then went back down again after hours yesterday. It only finished down 1.33%. We covered this yesterday. They're really good at setting expectations for the following quarter so they can beat it. And they did exactly that this time. They beat on earnings by 76 cents. They lowered the number of subscribers that analysts were thinking 5.5 million subscribers. I think they lowered it to 5 million subscribers. What they'll do when they report earnings, they'll just report 5.1, 5.2. They've done that. They have a history of doing that. They're really good at that. So anyways, that's Netflix there if you care. Pepsi also back to new highs as well. Great day for Pepsi. We own this stock in a couple of our portfolios. Beat on earnings by 5 cents. Their healthier products, their lower or zero calorie products, apparently are selling a little bit better there. And so that was one of the reasons that they beat on sales and revenue. And generally, overall sales saw a nice little uptick there as well. So good for Pepsi. They obviously earned the new highs. T-Mobile and Sprint, this came out yesterday after the close. The Department of Justice is saying, hey, we're likely not going to approve your merger. TMUS is T-Mobile, S is Sprint. Stocks lower on that news. Sprint taking the brunt of it there. IBM, we did sort of touch on that. They beat on earnings, missed on revenue, down 4% on the day. That was kind of a weight overall. Generally on the market. If you have questions, I'll try to answer them for you. I got to be particular about the questions I can and cannot answer, but if it helps you out, I'm happy to do it. Jose's, the Bernie Sanders Medicare for All. Remember, Bernie Sanders got a lot of traction in the last presidential election. Did really well, right? I mean, whether you love him or hate him, he did a great job. Now, if he gets traction on this health or Medicare for all, that's not good, right? And you can obviously see that Wall Street does not want Bernie Sanders as the president. They don't want him anywhere near being the president. So watch how that has an effect on the overall markets if somehow Joe Biden doesn't get into the race or these other Democrats don't gain any traction. If everybody ends up staring at Bernie Sanders as the Democratic nominee or seemingly the Democratic nominee, could be a problem there with that healthcare stance. So, I take all politics out of it. I'm only focused on what's going on here with the markets and how people respond. So we'll keep you posted. What's the history of the market the day before Good Friday, up or down? I don't know. I haven't studied that one. It's a half a day, so half days tend to be positive. Also, the day after a 3-day weekend tends to be positive as well. So Monday statistically has the chance to be positive. I believe it was 68 or 69% of the time it's positive going back to 1929. Yeah. Augusto says, hey Dustin, if you wanted to cash out and put your money in a safe place, what vehicle would you pick? I actually can't answer that question. Not allowed to say that. I can say that I wouldn't try to time the market. I have friends, I have customers that have been trying to time the market now for going on 5 years, and they need 3-4 years now, and they need the markets to essentially crash to make all that waiting worthwhile and all that opportunity missed to make it worthwhile. So Augustino, I'm sorry, I get in a lot of trouble if I answer that question. I would say it depends on what you consider safe and what's your timeline, right? What are you trying to avoid? Do you need your money next year and you need all of it, so you're a little concerned about weakness in the market? Or do you have 30 years left to go and you're just trying to be a little fancy there? If that's the case, I probably wouldn't be looking for a safe place in the first place. Financial investor pointing out high yield interest savings accounts. Marcus is a good one. There are a lot of them actually these days. I would actually say to start at your credit union if you happen to bank with a credit union. I'm noticing a lot of credit unions getting very competitive. They want to be a part of this game as well. They're a little slow, but you might find that you don't have to move banks at all. Check your local credit union first. Otherwise, there's a lot of good ones if that's what you're looking for. Yep. Cool. Just trying to conserve. I got you. Hosier says, you're awesome. Thanks for all your good work. Any comments on gold and the recent small drop? Is silver next? Silver had a decent day today. Gold in general, after getting sort of walloped, going back, can I pull it up? Back in that whole February decline there, there's no real fear, right? You need people to believe the world is going to end to see a significant rally out of gold. I actually had a customer last year, middle of the year, say, no offense, Dustin, I want to take all my money out. I want to invest it in gold. And I said, well, it doesn't make any sense to pay us to do that, right? We're fiduciary, so anytime I have to give you the honest answer, I'll give it to you. It didn't make sense for them to just continue using us and to pay us if all they wanted to do was invest in gold. So I guided them in the right direction there, and naturally said, I think it's a mistake. Towards the end of the year, that looked pretty good. I know now, they can see it's a tough product to invest in a heavy way. So careful there. Stefan says, when will the market crash? Man, if I knew that, I'd be raising a ton of money and making my bets right before it did. Yep. Nice. Okay, well, I think I answered all the questions there. Sorry if anything seemed a little messed up today. I was just trying a different setup. We got the whole setup here. It didn't work yesterday. I don't like when things don't work. So hopefully everything was fixed today, looking good. Tomorrow, we'll still do Wine and Wealth for our customers. That'll be tomorrow night at 8 o'clock. Email invites will go out. However, no closing beat tomorrow or Friday as well. I don't know what I'm going to do with myself. Got a lot of work here in the studio, actually finishing up the shelves, getting some graphics put on the wall. It should be a pretty interesting, busy rest of the week. I appreciate all you guys watching there and helping us out. If I can help you in some way, you know where to find us, jazzwealth.com. And if you would like to hit the subscribe button, that's cool too. And we'll talk to you later. Enjoy the rest of your day.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.